Rajan Shah, Chief Investment Officer with Angel Stockbroking, joins us now. Rajan, good morning. Thank you for joining us. Rajan, let's talk about a trend. And the big trend this week is that the quality end of the market is now coming under pressure. Are you worried about that activity? Are you worried about the fact that if the quality end of the market comes under pressure, then it will be very difficult for this market to hold on?
Well, Nikunj, looking at the sentiment, what's happening in the economy and all that, the quality end of the market was commanding a very rich pricing. They were very expensive. And just to name a few, we were seeing companies quoting at 35p multiples like Lever, ITC, Asian Paints at 40p multiple. So I think that segment is now seeing a lot of pressure, and we are seeing a lot of weakness coming in there because a lot of selling is happening over there, and certain pockets in the frontline space still continue to be a little richly priced. So we could see some selling over there and some pressure there. But if you look at the broader market, Nikunj, I think the damage has already been done. I mean, almost 50% of the stocks are trading below the levels they were trading when the Sensex touched a low of 8,000 in October 2008. So while on the face of it, we feel that the Sensex is 18,700, but 50% of the stocks in the broader market are trading below the levels they were quoting when the Sensex was 8,000. So actually, if you see, the market is more or less, the Sensex is at 10,000 if you look at the broader market. So yes, we could see some selling because the FI ownership in that segment is very high. So with FI turning cautious, probably the damage may happen in the frontline space and certain pockets which are very expensive. But I think the broader market is very, very compelling. In fact, when I look at the broader market, it reminds me of a very famous quote of the legendary William Shakespeare. I just talk about this quote. It says, and I quote, there's a tide in the affairs of man. There's a tide in the affairs of man, which taken at the flood leads on to fortune. Okay, there's a tide in the affairs of man, which taken at the flood leads on to fortune. Omitted all the voyage of his life is bound in shallow and in miseries. From a stock market perspective, it means that, stocks bought at the height of absolute pessimism, utter dismay and disbelief, they help you make a fortune, else you regret a lifetime. Right. I think there are plenty of stocks quoting at below replacement levels. There are plenty of stocks which are actually
it's a great quote, Rajan, but let me also supplement your thought with one more quote. The trend is your friend, and currently the trend is not favorable. Rajan, I've heard about this 2008 comparison before, and okay, there is merit in this argument that markets are broken down, valuations are looking attractive. But just a reminder here, in 2008, stocks were suffering because of pain in global markets. Stocks were suffering because of global financial crisis. Currently, stocks are suffering because of local problems.
Well, Nikunj, problems are problems whether global or domestic, but yes, the global problem still continues, right? And we were doing well, so we bounced back. This time there is domestic problem, right? But I think sooner or later this will be repaired actually, and that may happen over the next 3 months, 6 months or 12 months, but it's surely going to happen. But Nikunj, time and again, this is my 23rd year in the stock market, and what I've learned in the market is that the best time to buy stocks is when there's gloom and doom and not boom, because when you buy stocks, when there's gloom and doom, you buy it very cheap. And every monsoon we have this shirt sale, footwear sale going on, furniture sale. When there's a Dubai shopping festival, people rush from here to Dubai to buy goods at 50% less. And here there's a complete sale going on in the market with some stocks quoting 60-70% below the replacement value. And yet there's no one to buy, So I think this is actually a sale going on in the broader market. I'm not talking about the front line where the damage could be another 10% or so. But I think in the broader market, there's complete sale going on, and I think this is a time to grab and load up really good ideas.
Rajan, so what is it that you would recommend, and what's looking like a good buy right now?
There are plenty of them, Aisha. Just to give an example, there are plenty, but just to give an example about how irrational the market is, let me talk about this company, East India Hotels. 24 properties. I was in Calcutta on the 1st of December. I met Mr. S.S. Mukherjee, the chairman of the company. I just asked him what would be the approximate replacement value of your company, and he said 10,000 crores. Approximately 10,000 crores. The market cap today is 2,600 crores. Even if you add debt of 800 crores, the total enterprise value works out to 3,500 crores. So you're getting this company at at 65% discount to the replacement cost. Reliance picked up stake in this company 2 years back at 132 rupees, and the stock is at 45. I mean, it's absolutely irrational. I mean, even Tata Group companies have not been spared. Company like TRF, it was quoting 5 years back at 1,000 rupees. Now it's quoting at 86 rupees. I mean, it's a Tata Steel is holding 34% stake in this company. It's no Tom, Dick and Harry company. It's a quality company into material handling business. Yes, currently it is catering to steel, power, coal, mining sector, and all of them are going through stress, and that's the reason we are seeing the company loss. But I think sooner or later it's going to turn around, and when it turns around, I think it's going to really multiply. I mean, the market cap of this company is just 95 crores, and the subsidiaries it bought 3 years back, it paid 250 crores for that. So you're getting the domestic business for absolutely free, plus subsidiaries at 40% discount. I mean, that's the kind of irrationality prevailing in the market at this point of time.
Rajan, you talked about TRF, but there's the other one, Tata Motors as well. How did you analyze the numbers?
I think Jaguar Land Rover has saved the day for Tata Motors, and I think this segment is going to continue to do very well, and I think commercial vehicle business is going to see continued stress at least for the next 6 months. But net, I think the company should report about 28 rupees kind of earnings. So at about 10 times, certainly it's not a stock to be sold. There could be moderate upside in Tata Motors.
What's your view on how Ranbaxy's performed this quarter?
Well, Aisha, this company continues to actually be in a lot of issues and, continues to post huge losses. 6 monthly losses stand at about 400 crores. I think situation is not going to improve, and yes, it's come down to, like 280 levels, and at that level, it's trading at a market cap of about 11,000 crore, which is almost equivalent to 1 time the sales, so certainly looks interesting. But I think, in the pharma space, my bets would be MNC pharma companies like Wyeth or Merck. Those would be my bets rather than Ranbaxy or any other bet.
Rajan, how would you approach IT stocks? There is definitely some sectoral tailwind there, but do you think large cap IT is now getting more like a crowded trade?
You said it right, Nikunj. It's becoming too crowded over there. Some of the companies now are quoting at 18 and 20 times the earning, like TCS is almost 20 times the earning. But if you look at companies like Asian Paint, Nestle, ITC or Lever, you feel that even at 20 times, they got still more upside actually, because this 20 times can easily go up to 24 times. But, I would be cautious, and as I've mentioned repeatedly on your channel, our bets would be Tech Mahindra, which is quoting at about 12 times the current year expected earnings on the merged entity I'm talking about. And in the mid-cap space, Geometric, which was recommended last year and which did very well actually, but has now come down to that level of about 70, 75. Interesting thing in Nikunj in Geometric is that this company is quoting at just 0.5 times the sales, and on the 2nd of August, and I think yesterday also the Godrej promoter has started buying shares from the market. I think on the 2nd of August they bought almost 1.5 lakh shares from the market when the stock was ruling around 67 to 72 levels. So when the promoter has started buying from the market, I think that gives you a very a good confidence that some looks interesting, and at even 10 times the earnings certainly looks very interesting.
But the company is not growing, Rajan. I looked at the con call transcript of Geometric. The management has said that there is a client specific issue. Q1 growth was poor because of that client specific issue, and for next 2 quarters that client specific issue will not be resolved. Why should one buy into Geometric software where we know there are near-term challenges?
Absolutely right, Nikunj. I'm very well aware of that. I went to the transcript and I have seen that one of the clients is, in pain, and so the business is going to take a hit. But that precisely is the reason why the market cap has come down 30%. The stock cracked from 100 to 65 and now has bounced to about 70, 76 levels. And at 10 times for a Godrej Group company, it's certainly interesting. I mean, if you see other Godrej Group company like Godrej Properties at 20 times or Godrej Industries at 20 times, this 10 times looks interesting.
Rajan, banks have been really beaten down. Is it time to bottom fish when it comes to that space as well? Or do you think there's still some more time to go?
Well, we feel some more pain is there in the banking stocks. I have never been a fan of banking, and for the last many months not recommended banking stock except for Axis Bank, which has taken a hit actually. But more than banking, as time and again I have mentioned on your channel, I would bet on companies which are on the verge of getting a banking license and into insurance business, because that is what the future is, and that is where we can see spectacular growth actually in the coming years. So our bets are Bajaj Finserv, which has actually cracked a lot from 1,000 to almost 570 levels, trading at hardly 6 times. And Aditya Birla Nova, which continues to show a lot of strength and trading at hardly 10 times the current year earnings of about 110, 115. So these are the two prime bets, not in the banking space, but in the insurance and companies which could get banking license.
Do you see a situation of PE expansion in IT stocks now? We've seen a similar trend in consumer stocks. The P multiple for HUL or ITC in last 1 year has expanded meaningfully. Do you see a similar story getting played out in IT now?
Well, Nikunj, that's what exactly I meant actually in the earlier talk, that when you have companies like Asian Paints, Nestle, Lever, ITC quoting at P multiples of anywhere between 32 to 40, why can't IT trade at, a bit of more premium from the current levels of 20, So yes, that could go from 18, 20 to maybe about 24, 25, and still they would not be called expensive because, they are growing at a good pace, their earnings are into Forex, very good cash flows. So certainly the PEs can expand from here to maybe 24, 25. So that's a very strong probability.
Rajan, as a firm, you track Lupin with a magnifying glass. Now we can debate what they've reported for the quarter gone by. The bulls in the system would argue that the numbers were bad because of the currency hit. The bears in the system would argue that the business seems to be slowing down, and in the domestic business they've lost market share. Irrespective of the argument, to your mind, what is a good price to buy into Lupin?
I would see some downside in Lupin, significant downside in Lupin before actually I would advise fresh buying, because stocks which have held up actually could lose some ground actually in the coming weeks, because the FI ownership, and as you said earlier in the show that, quality stocks is on a higher side, and probably, if they decide to liquidate some, the damage on even such names could be quite big, So I would avoid buying into stocks which are yet to crack, rather get into those stocks where the damage has already been done.
Right, Rajan, appreciate your time and thank you for joining us.